get started with the Jones Act panel. I'm Tony Salgado from the law firm of Blank Rome. We have a full-service maritime practice. I focus on transactional work, doing a lot of ship finance, project financing, and Jones Act citizenship structuring for projects in the United States where non-citizens want to invest in the Jones Act. To give you an example of our current projects, we currently represent Dominion Energy in the financing of and the construction of the offshore wind turbine installation vessel called the Charybdis, and it's a lease finance deal. And our Admiralty group is handling the Dali collision or elision with the bridge. We represent the ship owner and the ship operator. This is just an example of the kind of things we do. I'll introduce the panelists, and after I do that, I'll ask them each to add anything they'd like to say about them or their company. We have Keegan Plaskon, who's Director of Business Development of North America for ABS. Sam Norton, who's President and Chief Executive Officer of Overseas Shipholding Group. Bob Wellner, who's Executive Director of Liberty Green Logistics and also a Strategic Advisor for Liberty Shipping Group. And we have Ben Nolan, who's Managing Director in the transportation sector of Stifel.
Certainly.
Let's start with you.
Well, good morning, everyone. Thank you for the opportunity to be on this panel, represent ABS. As you may know, ABS is a marine classification society. We've been around for over 160 years, and of course, some of our core focus areas are around compliance, safety, and also risk management. But sort of more broadly, we are definitely involved in the sustainability marketplace as well as advanced engineering and technology development. And one of the interesting things that we're involved in at the moment is around the MARAD's Center for Maritime Excellence. So we're really excited to kind of talk about that a little bit more moving forward. So thank you.
Yep, good morning. I'm Bob Wellner. I'm the Executive Director of Liberty Green Logistics. I was asked Thursday night by Tony to present on the Jones Act and the offshore wind industry. And anybody who's familiar with Liberty, the Liberty Group, it's a New York-based company, U.S. company, predominantly U.S. flag. We're a vessel owner and operate our own vessels. We're a multimodal logistics company and own a 100-acre terminal in Wilmington, Delaware. So how does an international shipping company end up talking about Jones Act and wind? And so we launched Liberty Green Logistics in 2020 as a full-service supply chain organization focusing on our core businesses of vessels, logistics, and terminals. And we purchased a company called Patriot Offshore Maritime Services, a vessel operating company focusing on vessels to support the offshore wind industry. And we also purchased a company called Renewable Strategies Limited, which is a database company that tracks, monitors, and records everything wind, which is both at sea and onshore.
Good morning. I'm Sam Norton. I'm the Chief Executive Officer at Overseas Shipholding Group. Most of you probably know OSG. It's a company with a long history and recently delisted from the New York Stock Exchange to become part of the Saltchuk family of companies. Saltchuk has 7 vertical businesses, including harbor services, liner services to Alaska and to Puerto Rico. And services, fuel distribution services and air transport business. Quite a diverse family-owned company based out of Seattle, Washington. And OSG is now happy to be part of that group. We continue to do our business as we have in the past. We operate predominantly in the Jones Act. We have 18 vessels that are Jones Act qualified vessels that trade petroleum product and crude oil, both in the Gulf of Mexico and up and down the West Coast from Alaska. We also have 3 vessels that are U.S. flag but not Jones Act. They participate, 2 of them participate in a program called the Tanker Security Program, which is a Defense Department, Transportation Department sponsored program to try and increase the number of internationally trading vessels that actually have U.S. crew and U.S. flag. That's deemed to be a strategic objective of the Department of Defense. And we have one other vessel that trades on time charter to the Military Sealift Command, which is the procurement arm of the armed services of the United States. And so we cover pretty much the broad spectrum of all U.S. flag operations, and based in Tampa, Florida. I'm happy to be here today after all of our storms in the last couple of weeks.
Well, I'm happy that you made it through too, Sam. My name's Ben Nolan, and I am at Stifel on the analyst side. I've been covering shipping, but Jones Act shipping for the last 20 years, and prior to that, I made loans to people to buy black oil barges. So a little experience in the Jones Act, maybe not as much as some people, but happy to be here.
Well, thank you all for adding to the introductions. So our general plan is to cover 4 basic topics. Last night I was talking to Han at the speaker's reception, and I guess we're covering some of the same topics, but we're going to do it from the Jones Act perspective, which is a little different. The prior panel, I think, focused more on international type issues, and we have the same issues in the Jones Act, but of course the regulatory dynamic is different. So our 4 topics are going to be alternative fuels, crew shortages, consolidation of the Jones Act, and the U.S. offshore wind industry. So we'll dive right in to alternative fuels. And I'm going to ask Keegan to tell us a little bit about the center he just described, and also to cover the U.S. National Blueprint for Transportation.
Yeah, thanks, Tony. It's definitely certainly a mouthful, and as you can understand, the U.S. government is certainly, I think, taking a pretty strong role to try to establish some pathways and some frameworks for sort of the future sustainability efforts. And one of those you may or may not be aware of is in 2023, the Department of Transportation, Department of Energy, the EPA, and the Housing and Urban Development released a national blueprint for domestic transportation decarbonization. And as part of that analysis across broad transportation sectors, not only rail, surface, air, and marine, there was also a mandate for the release of a maritime decarbonization action plan. And that has yet to be published. I think that it's in a comment period now, but hopefully we'll see something by the end of the year. But some of the major takeaways from that particular study that's really being led by the Department of Energy is really around a renewed focus on sustainable, renewable types of fuels. The next is certainly around infrastructure development, and whether that takes place sort of in the ports or in sort of the pipelines leading to those, for sure. And then lastly is really around coordination of frameworks, whether that's at the domestic level or at the international level. And so I think that's kind of lays an interesting foundation for some of the other work that's going on. And as Tony mentioned, and I'd spoken to it earlier, is the Maritime Administration recently awarded ABS the opportunity to help them lead a Center for Maritime Innovation and Excellence. And so that's while that's just getting started, we're kind of in a stand-up period at the moment. The idea is that center will be sort of the clearinghouse and place of innovation to help facilitate and foster the goals of the government. So we're really excited about that.
And part of the broader question that comes from the description of this action plan that's forthcoming is how relevant are alternative fuels to the Jones Act trade at this time? We see a lot in Europe. We know there's a lot of activity. The prior panel talked about it. How is the Jones Act trade reacting to what is coming? And what's anticipated to come, I guess. Sam, you want to start?
Yeah, why don't I jump in on that? I think it's a really important question. Those of you who follow the Jones Act understand that life cycles for Jones Act assets significantly exceed the life cycles for international assets, and so if you're going to, and the capital costs kind of commensurately so. So if you're going to build a vessel today and you're going to try and pick the fuel choice of the future, that's a really difficult decision to make. Certainly if you're in the tanker industry, which we are, it's a difficult choice for 2 reasons. First, because if you're going to build an asset that lasts 40 years and you're going to make a choice as to Betamax or VCR or whatever the fuel choice is going to be in the future, and your decision is wrong and something else trumps the decision that you made, the risk of obsolescence or having a white elephant is significantly increased. And the second point is, frankly, if you're building a tanker and you're expecting a 40-year life out of that tanker, 40 years from now, what's going to be the demand for fossil fuel transportation across the Gulf of Mexico? So those are 2 pretty daunting hurdles that you have to confront if you're looking at building a new vessel. So at OSG, and I think at some of the other operators, the view is we have to work with the assets that we currently have, and we have to think about ways to be able to mitigate the carbon footprint that we produce through the operation of our vessel, through incremental gains in what we produce on board, as well as operational efficiency and trying to continually and continuously reduce the fuel consumption that we have on board. I think that as we wait for the international market to determine what the fuel choice of the future, or the propulsive system of the future is going to be, we will follow the lead of the international market, which I think will take some years to determine.
Bob, you want to add?
So,
Another vessel operator.
so in the offshore wind business, obviously it's about decarbonization. So everything is toward, better fuel consumption, different fuel consumption, et cetera. So the buzzword for vessels is hybrid fuel sources. And things that they're looking at, obviously for smaller type vessels, electric alternative works. For the larger vessels, they talk about, I know we had the ammonia expert before, ammonia, hydrogen, a byproduct of the wind, and methanol are probably the key areas. But on the land side, everything, and this goes to what the port director from New York, New Jersey, Beth, said earlier too, is decarbonization is a must shoreside. So they're looking again at hydrogen and electric, et cetera. So the offshore wind business is promoting alternate fuel completely.
Keegan, anything from an engineering perspective?
Well,
ABS?
I think what's interesting to also note is that certainly within the Jones Act trade, you also have the transportation of bunkers, and there's been sort of over the last few years a growth in the LNG bunkering space in terms of while the maybe future of the fuel of the future has not yet been selected, there certainly has been strong motion in terms of adoption and support of LNG infrastructure here in the United States. Given sort of the broad access to LNG fuels here in the United States, and some early moves by U.S. operators to integrate, either retrofit or build new for LNG powered vessels, certainly supports that ongoing type of activity. So we're excited to kind of see continued growth in the LNG space, at least through this transitional phase.
Yeah, I'd agree with that. I think at the moment, LNG is absolutely the alternative fuel of choice in the United States. It's just that there's not very, and when I say that, clearly it's in the blue water category, not in the brown water category. But hardly anybody's building anything right now, but those things that are being built are generally at least equipped or can be equipped to use LNG. So I think that's the default choice. On the brown water side, it feels like there's been some methanol assets, but it feels like if anything's going to happen in a serious way in the near term, at least to me, it's probably going to be electricity. It's going to be plug-in power for harbor tugs and some of those kind of things that have a very limited scope of geography, because it's just hard to create the necessary refueling infrastructure in scale to be able to support a whole lot more than that in the near term, in my view.
But Ben, I would definitely agree with that, especially around the brown water scenario. I think that given the broad scope of that fleet and sort of the limited real estate that you have on board to sort of adopt these newer technologies, that many of those operators are looking at kind of drop-in replacement types of fuels, whether it's deep inland with access to renewable fuels, but also with the sort of steady drumbeat of new construction of tugs, the adoption of power storage and batteries have continued to be a strong trend.
Sam, did you want to add?
Yeah, I just the elephant in the room here, in my view, is LNG is also a fossil fuel. Electricity is generated principally by electrical power plants that are burning fossil fuel. Certainly from my perspective, my opinion is that there's going to be decades before we can materially move away from fossil fuels. And therefore, the importance of intervening in fossil fuel consumption and trying to remove carbon from that process, to me, is one of the key elements of how we're going to be able to move forward on this. And OSG is one of the companies, probably the leading company today in the United States, looking at carbon capture as a solution. We're doing it not only on our own vessels. As I said, we're looking for ways to try and mitigate the carbon emissions that the fuel burning on our ships produces, and so we're experimenting With carbon capture on board our vessels, the principal obstacle to that right now is not cost, nor is it technology, frankly. It's the infrastructure in place to be able to allow you to capture and then offload your vessels into, offload the carbon into an appropriate receiving facility. And so the other area that OSG is focused on is trying to think about how to build out that infrastructure. And that really is pinned on the back of projects working together with industrial emitters who, particularly power generators in the state of Florida, who we believe will ultimately be compelled either by market forces or by regulators to adapt carbon capture capabilities on their power generating plants. Florida is somewhat unique in many ways, but certainly from a geology point of view, it's very difficult to sequester carbon into limestone formations in Florida, so that carbon, if captured, needs to be exported or needs to be transported by one means or another. There's two ways to do that. You can either do that by pipeline or you can do it by sea. OSG believes that pipelines are difficult to get approved, and therefore the best solution is going to be a maritime solution. And the benefit of that is that if we can build receiving facilities in, say, ports around the Gulf of Mexico, in the Port of Tampa, up the Mississippi River, in the Port of Houston, Corpus Christi, that are going to be principally driven by the industrial capture of carbon and transportation to sequestration sites in the Gulf of Mexico. You build out that facility, you build out those shore-based facilities, and now you have the capability to be able to have ships that have onboard carbon capture with removal or disposal facilities that would be available at ports and easily accessed. And so that I think is something to think about as we look at the marine impact on carbon emissions in the United States. I think this is going to be a very exciting area for OSG certainly, and I think for others in this room.
Do you have any view on that from a class society, Keegan?
Well, definitely. It's a very exciting pathway, and I think it sort of short circuits a little bit some of the challenges with the other alternative fuels. So it allows you to continue to use kind of more standard petroleum-based fuels, but sort of do through retrofits, preserve those Jones Act hulls for longer periods of time, and really take advantage of that situation.
Bob, did you want to add?
I was waiting for Ben to say something about the CapEx impact of all of these things, because from a owner's perspective, how do you get the returns back from all these different alternative fuel sources, the storage of same, the handling, whether it's decarbonization or whatever the item is. So, Ben, I'm going to look at you and say, how are you going to fund all this stuff?
Well, I think the short answer is it has to be subsidized or enforced. Like people are not. This is not an economic conversation. If whether it's carbon capture or using another alternative fuel, the fact is, oil's cheaper, and it will always probably be cheaper, and gas is cheaper. And so either you're forced to or you're incentivized to. That's the only way.
And so right now, looking at it from CapEx and other financial metrics, what do lenders and investors think of all this in the Jones Act? Is there, in my view, and I think Sam alluded to this a little bit, is I think U.S. owners are hesitant to build new tonnage right now because they don't know exactly which fuel source to use. And it'd be interesting if we had a shipyard up here to tell us, well, how easy is it? How much flexibility, optionality can you have in a ship? And maybe, Keegan, you can answer that. But I've only ever seen dual fuel. I've never seen, well, we can do diesel and LNG. Oh, and we have this option for ammonia if it ever happens. It's just, where does that end? So that's a lot.
I'll jump in on that. I'm not a technical, but there are two things. One is the technology of the engine itself in terms of the fuels that you burn, and that's less complicated in my opinion because you have energy, and so you have to be able to combust that energy, and there are ways you can do that that gives you some flexibility. The bigger issue is where do you store your fuel, and the energy density in the different types of fuel is quite different. So if you're going to be burning ammonia or hydrogen or I don't know, methanol to some extent, you need to design your vessels in a radically different way to be able to give you the storage capacity to have sufficient fuel on board, and that also changes your cargo capacity. So if you make that kind of choice and say, I'm going to go for ammonia, you just need much more fuel capacity, and that gives you less cargo carrying capacity. That's a big choice to make if you're going to make that choice.
And I think in terms of, well, there's multiple facets to that question, but I think if you think about it with respect to banks underwriting, the key to that is having a ship owner being effectively supported by a long-term contract with somebody with very deep pockets. If you're a bank and you're underwriting shell credit, it's a very different scenario, and you don't really care if it works well or not as long as Shell will stand behind it. I think as it relates to, I guess, and I'd be curious to hear what some of you guys think in terms of the capital decision. I think alternative fuels are playing a part in the, call it, malaise of new building, but I don't think it's the primary component. I think the primary component is basically economics. In most of these categories, it's been a long, hard haul up until just a few years ago. And there's a real hesitancy to, repeat that process. And at the same time, I mean, I think at this point, the only way that you're going to get new buildings in, let's say, the coastal tanker market is if the economics are just so overwhelming and that greed overcomes fear.
So I just want to reinforce what Ben just said. Use Shell as an example. They happen to be an investor in offshore wind, by the way.
Yeah.
They have a big project lined up for New Jersey, but alternate fuels, that the hybrid thing they talked about is a great concept, but they don't want to pay for anything yet. So it sounds good. The whole industry is about decarbonization, et cetera, but the driver's economics. Of course, here in the U.S., it's political, it's about jobs and so forth, but it's all driven by economics. And to date, the developers and the OEMs and the Tier 1 subcontractors are not willing to pay the extra price for the alternate fuel.
I mean, I think we've talked a little bit about carrots and sticks, right? And, specifically here in the United States, what are the incentives for reducing your carbon footprint, right? We don't have an ETS necessarily here. The sort of the regulatory framework is either tied to MARPOL Annex 6, where that applies. And for, many Jones Act vessels that are not trading internationally necessarily, maybe they carry those certificates in order to, for the option of going international. But, generally speaking, they may not even be reporting IMO DCS data because the Coast Guard's sort of enforcement posture is a little bit lighter in that regard. So there's not really sort of an enforcement mechanism as strongly for domestic trade, and then in terms of any advantage for reducing your carbon, who's paying for that? That hasn't really happened yet.
Just to chime in on that, I think it's really important to understand that the dynamics inside most of the oil majors that are our customers in the last 20 or 30 years. Or 20 years ago, when we were dealing with the marine departments of the oil majors that are our customers, there was very much an integrated philosophy of how they wanted to work, and the shipping departments in those companies had a lot of authority. They were there to provide transportation solutions in an integrated supply and distribution business model. That's radically changed in the last 10, 15 years. At most of the oil companies, the trading desks are ascendant. They're the ones that make most of the money outside of the upstream development. Refining is kind of up and down. It's not really deemed to be the driver of value. You look at Shell, you look at BP, you look at Exxon in the last 2 or 3 years, they've moved into that place. The trading desk is where all of the heavy hitters go. And the traders don't want to take a commitment. They don't want to pay for anything, number one, and they don't want to take a commitment for more than a couple of years because their job is to trade, not to provide transportation solutions for an integrated oil company. And I think that's a development that is, to your point, is also hindering any kind of commitment to building new capacity because the capital costs are huge. Take a company like OSG, recently public, so I can use the data. And we had an equity base of about $350 million to go build one MR tanker in today's market is probably a capital cost that approaches $250 million. And so to build one ship, you're betting more than 70% of the equity of the company. No prudent manager would do that without a long-term commitment from an end user and probably some sort of obsolescent risk protection at the back end of that. And our customers, because of the ascendancy of the trade desks, they're not willing to do that. So I think that's something to watch in terms of whether or not the oil companies that need these assets will eventually, the risk management, the supply managers will assert themselves and be able to overrule the dominance of the trading desk right now.
Okay. Well, thank you. I'm going to move on quickly, a couple more topics we want to try to get through. I think we'll be brief on crew shortages because it was touched on in the prior panel, but I think the Jones Act has an added complication in that under U.S. law, U.S. flag vessels operating in the coastwise trade at least need to be crewed by U.S. citizens. And so I know, Sam, you have a view on that and crew shortage. I've heard you speak before about the problem, so maybe you could briefly elaborate on the problem and then solutions you might see.
Thanks, Tony. I guess somewhat controversially sometimes I have some views on this. First, some data. A crew complement is officers and unlicensed crew members. Generally on a tanker you have 22 people. There would be 8 officers and 14 unlicensed crew. On the officer side, to me the principal impediment to bringing younger people into the industry is the cost of education. With the exception of Kings Point, which is a federally funded institution that attendees at Kings Point are tuition-free in essence. They have to give a commitment to continue to enter into the business for, I think, 5 years after they graduate. But the state maritime academies, which are the primary feeders to companies like OSG, the tuition at those schools is quite high. And it's not only high in the basic tuition, room and board, et cetera, but because the students have to do training tours at sea, and they have to pay for those training tours as well. So there's fuel consumption and food and room and board and all those sorts of things on board. So I think one of the principal things that needs to happen is in a national maritime policy, if there was to be one, there should be a focus on making sure that the cost of education for obtaining the licenses, because it takes a long time to get senior licenses for the officers, that there should be some focus on being able to provide funding for that to make the cost of entry lower than it is right now. And to put it in context for a third mate, let's say, that's graduating from State University of New York or Mass Maritime, the tuition cost is probably upwards of $200,000 to complete that program if you're an out-of-stater. And that's just a lot of money for a lot of people. I think the second issue is that a recognition that today in our fleet, over 50% of the unlicensed officers were born in another country.
Okay.
So that's telling us that the immigration is a big part of our maritime manpower solution, and that we should be open-minded to using immigration as a positive force as opposed to just allowing it to happen by chance. I know that has created some controversy with some of our union partners. And to be clear, I've never advocated for bringing overseas labor in and paying them the wages that they get from overseas. I believe anyone that immigrates can join the unions. They'd be entitled to the same wages and benefits as anyone that's in the union. But there needs to be recognition that already that's a principal source of where we get our labor, and I think we can do a better job at tapping that source for the future.
Okay. Keegan, did you want to add anything? You're a Kings Pointer, is that?
That's correct.
Okay.
So, to that end, I did have the pleasure of being able to sail for 5 years at the beginning of my career, and I can say at that time, this was over 25 years ago, and I was sailing on a ship that was already 30 years old at that time, And, the technology on that vessel was, let's just say, a little bit dated, if you will. I mean, we had over, 35 crew members on a small, Coronado-class NASCO-built steam oil tanker. Any given engineering watch, we'd have 4 people in the engine room at a time. It was sort of an open environment, 120 degrees, Fahrenheit, air temperature, and it was hard, dirty kind of, work, of course. And, fast forward a few years, and, you're able to get onto a vessel that's, DP3 and diesel electric and has an air-conditioned, sort of a machinery space and that type of thing. And it was a different experience, right? And I think that the, as technology evolves and we start to see sort of more, kind of automation and remote control support, that I think that the nature of the work is going to change and, continue to, I think, attract that younger crowd for sure.
If I can jump on that, and then I'll shut up. One of the things that is also of note is that in our officer corps, less than 2% of the officer corps are women. And to me, to Keegan's point, the job has changed a lot. It's no longer, in my opinion, a lot of physical heavy work. It's a lot of emotional stress, a lot of intellectually stimulating work. To me, are very suitable for men and women, and we as an industry need to do a lot better job at attracting women in the industry. Those of you who followed, there's been some controversy about sexual harassment and things. The industry needs to clean itself up in that respect. I think we've started to do a better job at that, and I think that one of the solutions for us is to really communicate better and reach out and try and build out the women seafarers that we have in our organization.
Bob, you want to find a word?
I'll go fast.
Okay.
So for the U.S. maritime industry, it's critical to have a national maritime strategy. So I agree with what Sam said, and I agree with part of the things he talked about. There is a bill that's being introduced, Kelly Waltz. Kelly actually is a senator from Arizona who went to Kings Point, not ahead of Keegan, of course. But they proposed some of the suggestions relative to manning issues that Sam's talked about as far as reimbursement, et cetera. Again, the Coast Guard has to improve their certification process, and it was talked about on the prior panel, which is critical for the international space, but more particular here in the U.S. is education and awareness of the public about what the maritime industry is about and the opportunities that exist and what the future is like.
Okay. Ben, I'm going to wake you up at the end there. We're going to still cover the consolidation of the Jones Act, but I think we'll be brief because I think we probably have a lot to talk about with the offshore wind industry. What's your view of the current consolidation trend in the Jones Act? Is it, and of course, Sam just went through that, but I'll take the analyst view.
Yeah, well, I mean, at this point, there's not much in the way of public companies. What I would say, though, is, and there has been consolidation, not just yours, but others in the last number of years, and really even this year. It feels like that's continuing to happen, and I know in the brown water space there are a number of things in the hopper and if you just thinking about, and I'm thinking about like Kirby here on the tank barge side. If you go 6 years ago, there were probably 50 different operators. Today there's 30. And it's getting more condensed, and I think that's going to continue to be the case. It's for a lot of reasons. Capital is a little bit more difficult for smaller companies. Labor, technology, all of these things are making it more challenging for small operators to exist, and that's just doesn't seem to be changing.
Okay. Well, thank you for that. I guess we need the tech desk to help us with Bob's slides.
No, I'm good.
Want to put your slides up for the offshore?
I'm
Oh,
good.
they're up.
Oh, they're up anyway. That's right. I don't need the slides, though. Thank you for that.
You
I mean,
want to have the one graph? You had a couple graphics.
yeah, it's good. Pictures are always good. I'm a
Why don't
picture
you-
person.
Can you turn it back on in advance?
Yeah, go ahead, back on and just, I'll
Sorry.
skip through. Go ahead.
Exercising moderator.
Next. See, I'm better talking. Go ahead, you can skip that. I already talked about that. So this is kind of the global situation for the development of offshore wind, and the point of this slide is to look at where the United States sits as far as development of offshore wind. China obviously outdoes everybody 2-1. The UK is next. And important to note is Europe has been doing offshore wind for 25 years. So certainly the technology is there, and the concern here in the state is not being driven by whether we can do it or not. It's about the economics. Go ahead, next slide. And this is what's going on in the U.S. I'll just go through this fast. There's about 40 lease sites that have been designated, predominantly in the Northeast and Mid-Atlantic. There's 28 on the East Coast. There's 4 sites in the Gulf of Mexico, 7 on the West Coast, and potentially 2 in Hawaii. Okay, next. This is just the East Coast demand. I'm not going to go through it, but again, you can see we're in the hotbed here from Maine down to North Carolina is where all the activity is going to be happening for the next 10 years or so. Next slide. So this is the offshore wind issues: permitting, Jones Act, supply chain, local content, labor, safety and security. I've changed financing to dollars because there's 2 parts there. What's the cost of doing business, and then what revenue can I generate at the other side? So that's what's going on. What you see with the delays in all the offshore wind projects today is the balance between those 2 items. It takes 7 to 10 years to develop an offshore wind farm. So if you bid a fixed price on a purchase power agreement on day 1, 10 years later, is that price going to hold up? That's been the big change in the industry. Next slide. And this is just to talk about the vessels. This is just to give you an idea of the types of vessels. So there's 4 stages in offshore wind: pre-construction, construction, post-construction, and decommissioning. Obviously, we're not going to talk about decommissioning because that's 25 years from now, so we don't need to worry about it. But there's 20-plus vessels. This is just a sample of the vessels required in offshore wind. And based on Customs and Border Protection definition, better than 50% of those vessels have to be Jones Act. Okay, next slide. Pictures of vessels are good. You can skip that. You all kind of get an idea. There's a crew transfer vessel, a service operating vessel, wind turbine installation vessel, et cetera. But these are samples of the type vessels. Next. And that's just a slide at the end. You can skip that completely. That wasn't supposed to be in there. But it's a very complex industry with a lot of complex solutions. And there's opportunities there that'll go on for quite some time. The predominance of vessels are needed during the construction phase, but the duration the 20 to 25 years are in the operation and maintenance phase, and that's where the focus is, and that's where the real opportunity is for Jones Act.
And I guess let's go back to Ben for a moment. And I'm going to ask Sam if you've changed your mind now, you'd like to go into offshore. Let's start with that first.
So, we've looked at offshore. I'd ask Bob because he's in the business right now. The problem that I've had in the past is the allocation of risk has been disfavorable to the owners. I kind of go to the same trading desk mentality where most of the European offshore developers, they come in and they want to push all the risk off onto the owner. If you're, again, Jones Act, capital costs are expensive. If you're going in and you have to take all the downtime risk, take costs associated with an inability to produce power, weather risk, all those other things. The original contracts that were being pushed out there pushed all of that onto the owners. When we looked at that, we said that and then they want to use their cost of capital to assign you and say you shouldn't make more than 7% on your long-term asset. The risk reward there was not attractive to us, and so that's why we've passed to date. I think hindsight has proven that the people that were early in probably regretted some of the risks that they took on.
I could respond, but you asked Ben, so we'll let Ben talk.
No, I mean,
Well, let me clarify, Ben, what I was going to ask you.
Okay.
To give you another moment there. No, it's more from the analyst point of view. How do you view this segment of the Jones Act, and are there opportunities for, I guess, companies to get in early, start developing it, go public, or I don't know how much you comment on how lenders view it.
Yeah.
I mean, from lenders' perspective, which I do ship finance aspects and get asked this question. Initially, a couple of years ago, one of the questions to me was, well, what do you do after you build it and the wind farm's up? Now I've got a mortgage on something and nobody wants to use it. But I think the answer is they'll build more.
Yeah.
You alluded to, Bob. And also, they'll need maintenance, and some of the same ships that put them up have to be used. But
Right.
Go ahead.
No, I agree sort of with what Sam is saying, that there were a number of false starts and teething issues, and the U.S. is just far behind Europe just in terms of everything on offshore wind, really. It feels like, and Bob, you might have a better sense of it, it feels like that's beginning to change. I know that the Scylla is about 100 miles from here installing offshore wind turbines right now.
Right.
And
The Scylla is the sister ship of the Charybdis.
Yeah, well, it's one of those big ships that was shown up there that is doing it, and so it's finally starting to come around. Feels like the economics are a little bit better understood, and it's still not. It's nothing compared to what's happening in Europe, but it's gone from sort of a stall to maybe sputtering to life. I don't want to.
So at this
disparage,
point,
but-
I mean, all the comments made by Ben and Sam are correct. The industry is changing in the U.S. The developers are starting to see things have to happen slightly differently here. The states that actually buy the power now are putting in escalating clauses rather than lock in a price 7 years ahead of time. You have escalators built in if cost of living changes. The risk-reward story that Sam brought up is still there. They try to flow down every clause. Only good companies with good attorneys can push back, and we've been fortunate to do some of that. So anyway, the industry is evolving. That's the best thing. And the government's, the current administration, 30 gigawatts by 2030 is not going to happen because of delays, but 110 gigawatts by 2050 is a possibility. So again, opportunities there. Of course, we have the risk of the political change maybe in November. We have to see how all that happens. So if you're going to invest, wait till after November to do that.
So the bottom line is watch this space. Well, thanks to my panelists. I think we had a lively discussion. And thanks, everyone, for attending. And thanks to the tech team. And Nick, I turn it back over to you. Thank you.
Thank you.